markets, and we welcome in Caroline Wood, Senior Markets Correspondent here on Schwab Network, to talk about Bitcoin, which in fact moved over 30,000, and that was on a report that a Spot Bitcoin ETF, boy, we've been hearing this forever, could be coming now, that it got the okay, but it really didn't get the okay, right? I mean, what's going on here?
Well, exactly that. We're keeping an eye on Bitcoin, as you said, up about almost 6% right now, trading above 28,000, but not nearly as impressive as the gain that we saw earlier today on that unconfirmed report that BlackRock's iShares Spot Bitcoin ETF had been formally approved by the SEC. That report was unable to be confirmed, so the Bitcoin shot higher and then lost a good chunk of those gains. Still seeing, an impressive rally today. But there was a now deleted post on X, formerly known as Twitter, by a crypto news service called Cointelegraph that basically said the SEC had approved that ETF, but then they have since said, "We apologize for a tweet that led to the dissemination of inaccurate information regarding the BlackRock Bitcoin ETF. An internal investigation is currently underway. We are committed to transparency and will share the findings of the investigation with the public once it is concluded within 3 hours." So we'll look forward to that. The results from that. BlackRock has told multiple media outlets, though, that the iShares Bitcoin ETF is still under review by the SEC. I will say another little bit of news that I've seen on Bitcoin today is there was actually a Bernstein analyst out with a pretty bullish note on Bitcoin, noting that its hard money properties make it an attractive safe haven asset, which we know during some times of turmoil, people might flee to safety. Not necessarily the case today with what we're seeing going on in the major averages. But this analyst also points out that since Bitcoin's inception, it has consistently outperformed gold. So potentially better play than gold in his mind. So that could also be giving a little bit of a boost to Bitcoin. We're seeing it currently up about, let's call it 6% at 28,460 right now.
And I know you're buying a Ferrari, Caroline. No, she's not today. Ferrari will now let you pay for your new car with crypto. That came out over the last couple of days. I mean, that's sort of another, but it just shows the big picture and the footprint that crypto really has. Every time I speak to an international investor type guest, they all say that internationally it's certainly much more accepted than it is here in the States, and that's why Gary Gensler is really holding this up, right? I mean, in January we might hear more.
That might also help with the bull case for crypto, because right now we're not really seeing it being used all that often. So there are those that say once you can make the case that it's an actual currency that people are going to be using, then maybe you can become more bullish on it. But I don't have crypto to buy a Ferrari, and you know me too well. I'm too frugal to buy a Ferrari.
Maybe tomorrow. And on those Bitcoin Spot Bitcoin ETFs, there's a lot of them. There's 8 or 9 of them, and including BlackRock. So we'll wait to see whether, because the word was it was coming out in October, and I think that's why people believed it so fast, and that's why you saw that sort of gut punch reaction. Let's get to another story, and that's all about Apple and iPhones. Tell us a little bit of that. iPhone sales in China?
Well, Apple's one of the few stocks that's really not working today. You take a look at the Magnificent Seven, 6 or higher. Apple is lagging. Shares down only about 0.5% right now, but still in the red. There are reports that the iPhone 15 is off to a disappointing start in China, actually, compared to the iPhone 14. Bloomberg says that 15 sales are down 4.5% compared with the iPhone 14 over their first 17 days after release. So that could be weighing on shares. Morgan Stanley also lowered its price target on Apple to $210 from $215. Still kept an overweight rating on shares, so still a bullish call, but just kind of scaling back expectations. They expect Apple to post a relatively inline September quarter when it reports in November. Says they're expecting $89.9 billion of revenue on a $1.39 EPS. That's within 1% of consensus, but they're already more concerned about the December quarter, saying that their prior forecast it's going to be weaker than they were initially expecting, not because of worsening demand data points, but because supply, both labor and component, remains a headwind that's resulting in a push out of iPhone 15 Pro and Pro Max models from the December quarter to the March quarter. Also pointing out that the stronger US dollar and unfavorable 14-week comparisons were also factors behind their scaled back estimates. So scaling back, looking ahead to the end of the year, the key holiday quarter, and scaling back their expectations there. They did say, Apple reports on November 2nd, they don't think that the bull bear debate will be solved at all with this report. So they don't really see it being a catalyst in either direction. So still bullish, just scaling back expectations. That being said, I mentioned the new price target's 210. The median price target for Apple is 200. So they're still higher than the median right now. Apple currently trading at about 178 right now, off about 0.5%.
So still with some upside potential there. Thank you so much. Two big stories. Thank you, Caroline Woods.